So my niece started driving recently and she started to look at different insurance companies. She thought, oh, I'm going to get a PLPD car, just a basic thing and get going on the road. But when she went to buy insurance, the price was crazy. Like it was out of this world. $400-500 a month for PLPD on a car. It was ridiculous. If you've run into that struggle where you're a young driver and you're trying to find the best deals for insurance, today we're going to go over the 5 cheapest car insurances for young drivers in Michigan. So I've got this article here from NerdWallet, and they're going over the different levels and ages of car insurance, and they rate the ones that they think are the cheapest. I don't completely agree with all of them, so let's dive into them and go over what they're talking about. And the first one that they say is Esurance. Now, I want to warn you, Esurance is an online portal. It's like a virtual world of buying insurance without having a specific agent. So if you're new to car insurance, you don't want to necessarily go this route unless you have somebody that can give you that advice on what coverages you should have. Otherwise, you're going to end up with state minimums. The price might be good, but you're not covered for much. You're really just buying a piece of paper that says I can drive. But Mark, why do I want to do that? I just want a piece of paper that says I can drive. I want the cheapest thing I can get. Well, the thing is, you want to make sure you're covered, because if you have any plans on doing any type of a career or having any type of income or assets in the future, you're protecting that future income. If you have a claim and you go bankrupt from it, which you probably would as a teen, you don't have money to take, so they're just going to wash it off and clear out your debt. Well, you still get deducted from your payroll up to 30% for life until it's paid off. So if you become a doctor and you're making $200,000 a year, they're going to take $60,000 a year from that income. Granted, if I was making $200,000 a year and I could lose $60,000, there's a give and a take on that one. But not a lot of people plan on making $200,000 a year. The same scenario as if you were making $45,000 a year and they're going to take $12,000 to $13,000 of that. It's tougher to live on, but you want to protect that future income now. The next one was called Secura. I've never heard of them. I've been doing insurance for over 10 years, and this Secura company is just, I don't know. I'm dug in a little bit further, and there's no way to get an online quote. It's just a portal. I believe Secure is more of like an agency where you're talking to one specific person, and that's the route that they take you through. I want to say I know a whole lot more of them. I would be a little bit leery, and maybe I'll make a separate video to talking about them because I'm going to research them a little bit further. So if you guys are interested in getting the information on that, definitely hit the subscribe button and turn that bell icon on, so that way when this video goes live, you'll get that up-to-date information. Number 3 was Geico Insurance, and I've actually been with Geico Insurance back when I was a teenager. I swore I'd never join them, but I went back to them when I was a teenager again, even after I swore I would never join them again. They're not a bad company. They're actually a really good company. They're one of the best overall companies that do insurance in all the states for teens, for young drivers. They have some of the best rates because they do really well with higher risk type profiles. So when you're young, until you hit the age of 25, your rate is just naturally going to be higher. And that fits similar to what Geico is looking for. They don't mind if you have a ticket. They don't mind if you have an accident. They don't mind if you have a few things. It's when you have multiple things where them and almost every company starts to kind of disappear, where they just want to go off in the shadows and not let you know that they're there. The only issue that I personally had with Geico is I actually tried to do an in-depth review on them, and I couldn't because I could only find the internet data and the reviews and all that, and they have a huge book. They're massive. But they won't let you do a quote in Michigan, at least not online. So I filled out the form online. I emailed them. They emailed me back, said you have to fill out this whole sheet. We're going to mail it to you. Send us your, and they make you step by step. And there's 5 steps until eventually you either give up or you don't even get the quote at the end. So it was essentially a long process where at the end, someone called me and I didn't understand what they said. They hung up and that was that. I could no 800 number to call back, no way to contact them. And at that point, I just assumed that they don't want any business in Michigan. Well, then why are they advertising that they insure in Michigan? They keep doing that. Well, you're getting generic advertisements. You'll see a lot of companies do this where they have a footprint and they do have to do a little bit of advertising. It's because they have contracts. So if they do one state, they have to do another. And they just limit how much they do. Well, what they do is they create barriers so that when you try to get a quote, normally you just get a quote and it's smooth and it's easy, and those companies want you to buy their insurance. With the companies that don't want to have a presence in Michigan, they're going to put up a wall. Oh, you can't do it online. Okay, we'll go around the wall. Okay, well, now you got to mail me some paperwork to fill out. Okay, go over the wall. Okay, let's talk to you. And the person doesn't have a clue what they're talking. So they really make it a point to make it more difficult, if you're going to jump through those 5 hurdles, then they may be a really good fit. So they also talk about Chubb Insurance, which is a brokerage or an agency where it's multiple agents, and this is one of the larger versions. This is one of those big corporate, those independent agents, similar to what we do over at Valor Insurance, where we work with multiple companies so we can get you a quote across tons of companies. Well, Chubb is like the larger version of ours. It's more of the corporate version, and the part that is great about that is they're going to get you quotes with tons of companies. The only thing that I question, and maybe we'll dive in further, is the training and the knowledge that they have. Typically what I find, and I've actually been in the corporate setting, I've done some trainings across multiple states, and the part that I found was there's very little training and little experience, because once they get too big and they do too much, the knowledge just falls off, and they slowly stop training people the same way because it's difficult. It's difficult, one, to get an agent to even be an agent in today's age, and two, to have them have the knowledge and want to learn more about it. What ends up happening is just a whole struggle for them, and the success rate is really low, which in turn leads you to hire and train people that aren't necessarily at that level. Now, I'm not trying to say Chubb is bad. I don't know a whole lot about them as far as their agents go, so take that for what you will. That's just my experience in general across the industry. And coming in at number 5 spot is Wolverine Mutual. That is a really good company to go with. I love what they stand for. I've actually done some research. Maybe I'll put that in our video section because I did a whole presentation on them once just to find out who they were, where they were from. Great background. Great foundation. They're really good on investing, so they're a solid company. The only thing that they lack a little bit in is the tech. They're a little bit behind in the tech, so it's more of a hand the paper to Sue and she stamps it and then Bill processes it, and they've actually improved that. So they've gotten some websites going where they're becoming more and more of a tech version, which is what we're all looking for at the end of this whole process, is something simple. You can push a button, type in a few things, it gives you some rates, and you buy what you want. That being said, if you are older than the age of 20, Westfield is another one that they talked about. And I don't completely agree with the first 5 ones that they've picked because they're kind of unknowns, and some don't even like Michigan. So I will tell you the companies that I personally like. I like to go to Safeco. I like to go to Progressive. Westfield is a great one for 20 and older, especially if you're a homeowner. They've got really good rates. They're very lenient with things. It's just an overall great company. Travelers is another one that's in that list. They also are similar to Geico, where they're not quite wanting to do Michigan, so they put some barriers up where it's more difficult to get through. I've worked with them in other states, and they're amazing. But at the end of this whole process, what is the route that you should take? Personally, I'm going to lean towards a competitor, and I would say Esurance is going to be a really good route to go. If you guys want more information, because this constantly changes, day over day, this could be completely different in 6 months or a year, or these companies, because Esurance has their profile today, they might want something completely different tomorrow. Keep in mind their reviews aren't so great, so you're going to get a better deal, but the coverages may not be the right ones that you need. And I think a lot of that is the fact that you're not dealing with a local agent. If you guys are interested in getting a quote, we do have a link below, so if you want to check out some of the companies that we work with, they're down there as well. Otherwise, I'm Mark with Valor Insurance. I'll see you in the next one.